Over the past year, we've had a dramatic rise in the oil price. In March 2020, Brent was trading at $20 per barrel. We came into this year around $50 per barrel, with price increases really accelerating over the past couple of weeks, with Brent now pushing well beyond $60 per barrel. Underlying this is mainly the global reflation theme, expectations of accelerated global growth in the second half of this year. But OPEC has also been very firm in its production cuts, keeping to its targets, and even this year, cutting back on its planned increases, with Saudi also following through on a unilateral production cut. The market is very mixed on its views on oil. Some see the global reflation trade continuing, with oil pushing perhaps beyond 70. We're a little bit more skeptical, thinking that short-term weather conditions such as the pressures in the US have pushed up prices artificially. Nevertheless, this upward push in oil prices is going to have a big implication both for South Africa and for the major oil-producing nations in Africa, such as Nigeria and Ghana. With me, I've got two of my colleagues, Siobhan and Daniel, to unpack these themes and what they mean for South Africa and Africa. Daniel, oil's risen substantially, must bring a big relief to Nigeria and Ghana. What are the implications there? Can it stop currency depreciations? Can it help their fiscal positions?
Good questions there, John. A couple of things to note. Firstly, as you aptly stated, oil was hovering pretty much at levels of around 20 during the course of last year. And what we started picking up was both governments of Nigeria and Ghana started revising their forecasts for their budgetary purposes, down quite lower. In fact, they entered 2021 with an average of about 40 in both markets. And now we're seeing this beautiful uptick in prices, potentially going to hover at this 56 level, if not higher, depending on the different forecasts that sit there in the market. And John, first question is, does it give relief on a fiscal policy perspective? Not quite yet. What I mean by this is we need to see not only a requisite increase in the oil prices, but because production has been quite low, we're going to need oil to average a tad bit higher than what it's doing right now. So we've seen it hover just below 63 levels. We needed to get to anywhere between 65 and 75 for it to significantly impact both Nigeria and Ghana.
I'm now joined by Siobhan to unpack the implications for South Africa. Siobhan, first of all, higher oil prices going to push up our inflation numbers in SA?
They definitely have the potential to do so. Bearing in mind our petrol price is made up of two major components, one being your oil and rand component, which is actually making up about 1/3 of the total petrol price we pay. The greatest proportion is actually the taxes and margins that we pay over and above that. That is a lot more stable in pricing, and so we're going to find that petrol price inflation is not necessarily going to look as crazy as the oil price. That said, we do expect that there is a risk to the upside with the oil price going higher, but with inflation only having petrol at 5% of the basket, even pushing up the oil price quite a bit by keeping our exchange rate forecasts fairly stable, we only will see about a 0.1 percentage point increase in our expected inflation over the forecast horizon.
Okay, so just remind us of the current inflation forecast.
We're currently expecting inflation to average 3.8% this year, 4.3% in 2022, and 4.8% in 2023.
Okay, so bottom line is upward push to inflation, but very minimal. What about our trade account? Is it going to impact there?
It will be marginal as well. South Africa right now is seeing a boost to exports because the improvement in the oil price is not just based on, the oil price, but it's a commodities boom. And because we are a large commodities exporter, while we will be paying more for our oil imports, we are also receiving quite a bit more from our commodity exports.